Good afternoon. Today is Monday, April the 17th. The time right now is 25 minutes past noon. And let's do a bit of a recap on last Friday's price action on Wall Street. Basically, what happened on Friday, we have the release of the US retail sales number. And upon that release, the market went into a spasm. But before that, the market actually registered a high at 34,082.9 in the Dow Jones. And then after that, it basically unraveled. But towards the closing on the second half of the night itself, the market actually rebounded about 50%. So basically, I think there's a bit of a structural, I won't say structure, but I think there is a reversal pattern that has already emerged. So for those who are still long, be very, very careful because we are in the midst of an earnings season, and there's going to be a bit of a volatility going on. So, okay. So what I mean here is on a 4 hours time frame, we can see there is a bit of a reversal pattern. Now, when our market traded to a high of 34,082.9, you can see this red color bar here. This is on a 4 hours time frame. There is an outside bar here. Now, outside bar means that this is what we call a bearish engulfing bar, which technically can be quite bearish. Okay, so the fact that the market has actually gone up and then have this reversal pattern very, very close to my target price of about 34,400, then it means there is a possibility the market may actually reverse from here, short of another recovery. Okay, unless we have a recovery above 34,082.9, okay, I think I will have to go with the idea that market may experience some short-term weakness, and if that's the case, I think the market may actually pull back all the way to 33,275 before it find any kind of meaningful support. But again, I'm not ruling out the possibility of another marginal high to take out 34,331, which was last traded in February of this year. So again, based on the pattern itself, I think we are approaching a point whereby the risk reward starts to make sense, because overall the high traded at 34,712. If I believe that this is going to be the critical level that must not be exceeded in any rally going forward, then all I need to do is basically sell into this bracket of prices anywhere between 34,331, or even if I want to do a short-term sell right now, I could do that itself. Basically, all I need to do is watch 34,712. Now, for those who are not comfortable putting their stop so far away, you can do intraday trade. Let's go down to the 1 hour time frame, for example. Do we see the same kind of phenomena? Yes, we do. You see 34,082.9, which is last Friday's high. It also end up as a reversal pattern. This is what we call an outside bar, and market has basically rebound less than 50%, and if you continue to rebound, let me see how far it can go. Okay, if we have a rebound, essentially going back between 33,865 to 33,950, I think this bracket of prices is ideal for selling. And we have a rebound so far. As of last Friday, we have a high traded to a 33,900. So technically, we have seen a rebound on the short time frame. So if I'm going to be doing scalping, I will probably sell right now and then put my stop just above 34,100, okay, and then take my chances all the way down to 33,275. That could be a game plan for me, but again, I am not going to be doing that. I just want more confirmation before I turn bearish. Okay, but there are signs that the US is slowly slipping into a recession, because all the numbers coming out, whether it's retail sales, CPI, and of course we can see durable goods has all been backpedaling. So it does give us the scenario that possibly we are looking at a near-term recession. Okay, over in the S&P 500, we also see the same phenomena. S&P 500 managed to go to a high at 4,163.19 before it turns back down, and then at the point where it turns back down, this is a even more bearish setup. This is on a 1 hour, what we call a shooting star. And shooting star is a classical candlestick pattern that suggests weaker prices going forward. And we also have a bit of a rebound, 50% so far. And this is setting the stage for a short-term trade to the downside. If I'm going to be very aggressive, I'll put my stop just above 4,165 and then exchange for the possibility the market may go down to 4,069 or even 4,070 points. Okay, this is the nearby support. However, if this level cannot hold, it breaks and the market close below this level, the next logical place in which it will find support is going to be way down at 3,909. Okay, so again, this is going to be huge potential. Okay, in the Nasdaq 100, we also saw no new high traded. Okay, this high 13,204 was actually traded at the beginning of April. That means 2 weeks ago. And at a point on Friday, the market have a marginal has an attempt to go higher. It only managed to a high of 13,152 before it also closed as a bearish signal on a 1 hour time frame. So this suggests that all three major equity index on the short term do exhibit a little bit of a bearish setup. Okay, so like I said, if I want to sell at current price, which is about 13,080 points, then I will just put my stop just above 13,002, let's say 220, okay, and then exchange for the possibility of market going down towards the nearby support at 12,520 levels thereabout. Okay, so you can exchange this space here. It's about 2:1 kind of a risk reward ratio. So it's something that to consider, right? Over in Asia, we can see that Nikkei actually has a bit of a rally going on. This morning we have a high of just under 28,600 points, and this is getting very close to the nearby high. Again, this is setting up to be a low risk high reward. You can see the high traded here on March the 9th was 28,735 thereabout again. And if I'm right, then this level here, okay, should not be exceeded. So if it means if I want to go bearish on this Nikkei itself, I could actually go short right now, put a stop just above 28,750 and exchange for the possibility this market will unfold in a three-wave pattern all the way to 26,500 points. So this is big, okay? This is about 2,000 points in exchange for just a few hundred points of potential losses. So current prices is about 28,500 thereabout to 28,750. I think we can. I think it is quite a good risk reward ratio. We're exchanging less than 70 pips, 70 points for exchange for 2,000 points here. So this could actually be a good risk reward setup for those who are very adventurous. Now over in the Hang Seng, we can see a bit of a rebound going on. However, the structure does suggest that I think the bias to the downside is still very much possible. Okay, so right now we can see the market is trying to rebound. If the market can go back into this bracket of prices between 20,800 to 21,100, I think it is still an area in which it's going to be very vulnerable to selling interest. Let's see what happens if market goes into this bracket of prices. Look out for selling signals in the 1 hour time frame or anything that's less. Okay, now, when we look at China, now China have a major bump up this morning. Market has have a spirited rally this morning, all the way to 4,127 so far. Okay, we'll see whether it has enough strength in the second half of the day, but it's getting very close to the last week's high at 4,132. Okay, so I think if it can do that, the nearby resistance is going to be at 4,167.5. So again, I think there is a bit of that possibility here. Again, I'm not going to chase this market. Anyway, I don't trade this index here. Just use it to have a sense of where the Chinese market is going. Over in energy, we can see crude oil prices traded to a high of $83.49 on last Wednesday, and basically go into a sideways pattern. On Friday, we see a bit of a more significant pullback because this market has not pulled back in any significant way. So if this is the case, I think possibly we may see some bit of a short-term weakness going forward, and that means if this market can actually pull back, the nearby support, okay, I don't expect a very deep pullback. Maybe the market is going to go to $81.25, at best $79.35. Between this bracket of prices, anywhere between these two barriers, I think it's good to buy. And I am actually quite bullish on energy prices despite the risk of a global recession. I think the markets right now is very tight. Okay, and we'll see what happens next. Over in the gold market, we have a bit of a structure damage going on. Market traded to a high of $2,048.80 last Thursday. Friday, it did not quite make it, although the market was rallying just before the release of the retail sales number, and that number caused dollar to basically reverse position, and then we have a major spike up in the value of dollar. Now that caused the gold prices to collapse because they all move inversely opposite, right? So because the gold market has been very long, okay, there's a lot of speculative long position in gold because of the gold outlier performance over the last 2-3 weeks, okay, ever since the outbreak of the banking crisis last month. Okay, so basically there's a lot of long position. So when dollar start to reverse, okay, everybody start to exit their long position. Okay, so I was actually having 2 long positions going into the last 2-3 weeks basically. Okay, I was long somewhere around here at $1,960 market, and then as the market pulled back here, I added another long position. But this one is just under $2,000. I think was around $1,990. So as the market goes up, I did not take profit, and as the market comes down, I will stop out on the secondary long position with no loss, but however, it's quite a waste because it was sitting on a very nice profit. I didn't expect this move to actually happen because it has yet to hit my ideal target of $2,070 thereabout. Anyway, this is how the market behave, right? So because of this very sharp drop here, I think I have changed my immediate view of the gold market. If the market can actually rebound somewhat in the day itself, maybe to about $2,013, I have an existing long position. I may exit this long position, and then if the market can do a deeper rebound, let's say to $2,020 to $2,026, I'm going to turn aggressively bearish. I'm going to put my stop just above $2,050 and exchange the possibility the market may come back to where it started at $1,950. So this could be a trade that I will be waiting for, but it's a high risk trade because the underlying fundamental still is in favor of gold prices going higher. But I do have a view here. If the market starts to come back down, this decline or what corrective pullback in gold could actually last throughout the whole month of May and into June itself. So if I have such a view over the next month and a half, gold prices may not be able to challenge new high. I think I have reason to trade the counter trend. Okay, I will take a look at gold prices. I think this gold price may, after June itself, may find a bottom, and then from there I will start looking for buying opportunity. Long term, I'm still very bullish on gold, and for the time being, because of the structure damage done last Friday, I have turned somewhat bearish on the short term for short term trading. Okay, over in the silver market, we don't see a very significant pullback. The market went up to a high of $26.09 before it pulls back together with gold, and the market actually found support at the previous high here, which was last traded on April the 5th, and that level is $25.14. The market pulls back here to the low of $25.15 and then started to stabilize. I think this is the near-term support. If this level cannot hold, the market may actually decline all the way to $22.83. Okay, so there's a bit of a potential here. So should you short silver? I will not recommend it because silver, we have seen over the last 2-3 weeks, has been outperforming gold. Meaning to say that there are more people who are bullish on silver relative to gold. So if I think I'm going to turn counter trend to trade the downside in precious metal, I will probably sell gold and not sell silver. Okay, so this is my personal view. Now, earlier on, I did mention dollar has rebounded upon the release of the retail sales number, and that can be seen as a market rebound from 100.42. Okay, as the market was falling since March last year, since March. Okay, we can see that the dollar has been practically been one-way street, and I was already telling people, you guys, in my various reports, in my earlier reports, say that somewhere around 100.43 to 100.83, there's a possibility buyer might actually re-emerge. But the market actually went slightly lower than my lower range of my target at 100.43, went up to the low as 100.42, okay, before the buyer actually comes back. So this could be telling us that since the market has been very short dollar, this is what we call a long short covering. People who are short now are buying back their position, not saying that there are new buyers in the market to support the dollar. What we are seeing, at least for now, is a lot of short covering. People who are previously short now buy back their position to cover themselves. So this activity can cause dollar index to actually rally all the way to 102.50. So there's a potential here. Okay, so that is how I look at it. Now, if the dollar is going to rebound short term, obviously all the major currency will have to unwind. Okay, the sterling was trading to a high of 125.45 before it started to pull back at the same time when dollar is rising. Okay, so of course we all know these are all inversely opposite, and the nearby support is somewhere around 123.45 levels, and we are going to be likely to see this level either today. Okay, I think it's very high. We can see this level being challenged this later in the day, and if this level cannot hold, then the next logical level for the sterling to hold will be somewhere around here, okay, which is 121.80. Okay, so we can see that if the market break 124.45, 123.45, it may just go all the way to 121.80 level. So there's a bit of a downside opportunity here if you believe the dollar rebound can sustain. Now, over in the euro dollar, which is a bit of quite a sad story here. Actually, I was short euro dollars going into this rally here. Okay, I was unfortunately I was already short going into this market before it rallied all the way to 110.75, and I was stopped out of my short position. And then shortly after that, the market actually reversed. So that becomes a bit of a tragedy for me. But this is how the market behaves. Sometimes you're right, sometimes you're not too right. Okay, so I have to accept the fact that the euro actually managed to go up to 110.75, and now it looks like it's pulling back. And if this pullback, the nearby support is probably this nearby support line, this black color line here. And if this level cannot hold, the next level to hold that may hold is 108 108.30. So let's see whether that is going to be the case. Okay. Now, Aussie dollars has been very hard to trade of late. You can see the market have very, very sharp rally and then followed by a steep drop, followed by another sharp rally before you see another sharp drop. So basically, this is very, very difficult to trade the Aussie market over the last week or so. So for the time being, I'm just going to leave it aside. But it does look like the market may actually attempt to trade maybe. I think there's still that possibility because of that historical very sharp rally and sharp reversal. Who is to say that it cannot do another one to rally to 0.68 half? Okay, let's see whether it does do that or not, but let's see. Okay, but for time being, I'm just basically going to observe and not do any trading in Aussie for time. Okay, now this one is actually come out to be a fairy tale. The dollar versus the yen has been doing this rebound pattern for quite some time now, starting from March 27. So we can see this rebound actually has been ongoing for some time. And I was alluring to the possibility the market may actually rally to 134.75. So as the market was trading into the range of 132, I actually observed this for a couple of hours without committing. But just 1 minute before the release of the retail sales, I decided I want to go in and I decided to buy because this is the bracket of prices at which I've earlier shown you guys to be where I think the buying interest may actually emerge, and it did. Okay, market have a major rally here, and it does look like if this rally is going to be sustained, it may go all the way to 134.75. I'm already long, although I have a very small position, but it's still long nonetheless. So let's see whether this trade will pan out. Okay, the dollar Canadian is very much like the dollar index chart here. Okay, we see that the dollar Canadian has actually been falling since March itself and all the way to 133 even before it's found it found some kind of foothold. Okay, so we have a bit of a rally, but since then the market is also going into like a pullback. So whether it can sustain or not, we will have to see. Okay, but if it does sustain, then the nearby resistance is going to be at 135.50. So there's quite a bit of a room to the upside, at least 200 pips here to be considered if the market can sustain. Now over in cryptocurrency, we can see that Bitcoin has enjoyed a fantastic run since the outbreak of the banking crisis last month. Bitcoin went up to 31,035 cents before it hit the air pocket. Now prices is pulling back. So we can see that we have a very classical three-wave pullback. Market could be very near the end of this pullback with a little bit of potential. Maybe it can slide even further, but nearby support is going to be centered around 29,700 to all the way to $29,350. So if the market do pull back into this bracket of prices, maybe that will present another buying opportunity. So structurally, I do see that the rally in Bitcoin is likely to sustain because you can see the rally is pretty sharp here and it does not look like it's over yet. So we will have to see. Nearby, I think the target could be placed somewhere between 32,000 to 33,000. So if you are those person who is very aggressive and want to chase every rally, then this pullback here may offer you that opportunity. However, I'm not going to do it myself. I still think that anything above 30,000 is a little bit too high a price to pay. Anyway, this is all I have for you today. I will see you tomorrow. Bye-bye.